Technical analysis, literal astrology for stocks. Technical analysis is a load of horse.
In this video, we're absolutely destroying a Tesla bull that you all and we all know and love. Of course, I'm talking about even Stephen Mark Ryan. Say stupid things, get roasted. Don't say I didn't warn you. Before we continue, join the tens of few people on our Patreon. It's only $4.99 a month to join, and our Discord is free.
And we're going to put a link up there and maybe down there. So please hit like and subscribe, hit that bell, come join us. Free Discord.
Free. I'm Steven.
And I'm Mark.
Yeah, and Ryan couldn't make it.
Yeah.
Let's get to it.
Let's look at the charts and see if that is the case. It very much is the case by my work. We know this stock was as low as $12 just a couple of years ago. It hits $4.15. There are no lines on here. Let's put some lines on.
Here comes the stocks astrology. This is a deadly combination. Hubris, a gambler slash trader slash stocks casino mindset, and painting yourself into a false sense of security by reading into the tea leaves of what a stock has done historically. People who don't know what the fuck they're doing, can't understand a company or the technology or anything like that, lull themselves into a false sense of security. Oh, if it's gone like this, then this is probably going to, I can't lose money because stocks astrology. And then people base their decisions on what the fuck has happened in the past. Ladies and gentlemen, the only reason a stock price changes at all is as the result of buying and selling activity of that very stock. The collective decision of many tens of thousands, maybe hundreds of thousands of investors buying and selling a security. That's what moves the stock price. What the stock did yesterday or 3 weeks ago or over the last 12 months has absolutely no bearing on what the stock does today or tomorrow or next week. Nothing at all.
For someone who is so usually on point, who I usually agree with and make some great points, that is probably the dumbest thing Stephen Mark Ryan has ever said. The idea that looking at charts has absolutely nothing to do or gives you no information on what a stock's going to do in the future is the utter horse that you speak of, sir.
He said the stock's price yesterday doesn't matter for today's price. And it does, because let's say I give you a simple example. A stock ran up 3x in one day. Most likely it's going to matter today when it doesn't run up again or
Right.
continues on the trend if it's undervalued still. And if it ran up too much, it's going to pull back.
All of his bullish points about Tesla come from looking at the past. Look at how Elon's executed in the past. Look at the year-over-year growth of the company. Yet for some reason, when you put the information in a chart form, it doesn't mean anything. This makes no sense. What a chart is showing you, he's right. The stock price is based on the collective buying and selling of traders, tens of thousands or hundreds of thousands of people. The stock chart is not a prediction. It's like a seismograph. It's like a trail of breadcrumbs, right? If we look historically, and he's about to show a section in the video where you see that Tesla has touch points at $208, let's say, 208, 208, 208, and it continues to break out. What does that tell you? It tells you that the investors that were collectively investing in this are eyeing those price levels for something. For some of it, it's a sell point, and for others, it's a buy point. So it's not saying what Tesla's going to do at that price, but it's giving you an indication that other people are looking at that level for something. For big institutions, it could be a sell, and for retail investors, it could be a buy. So this idea that stock charts tell you nothing and that it's stock astrology, that's the horse.
This is directly responding to what he said, that people are reading tea leaves. And you're not. When I was looking to buy Tesla, I haven't bought Tesla in a long time, by the way.
Well, I bought today.
Until basically the last couple of days, I've been buying Tesla at this $200 level. And there's a big reason for that, because when it hit the peak, I was not a buyer. Look, I didn't sell either, but I was not a buyer. And there's a very clear reason, because Tesla is in a channel. And if you just pay attention, you can see what channel it's in and what it might touch. There's no guarantee it'll touch those things, but it might touch them. So when it was over here, I was like, you know what? I don't feel like buying at the top. I think it has to come down to at least this major support, somewhere around here. I didn't know where exactly. That's not what I'm saying. And finally, in the last couple of weeks, it's been hitting my price targets of 225 and lower. We even went down to 208. These are lines that I drew from like months ago, and it's hitting those targets. Why is it hitting those targets and then bouncing off of them? Like, that's the facts. Traders and people are looking at these things, so that means if enough people are looking at it, there's going to be some consequences to it. It doesn't mean it's predicting Tesla's going to 4 trillion or not, but I know that these are good times to buy at these prices. That's what I know from these charts.
And that's actually a really good point. Even if if you, Stephen, don't look at charts and don't think that charts have anything to do with the stock price, a lot of those big institutions are investing a lot more money than what we are. And these are historical levels of resistance and support that they use. So even if you're not looking at charts, a lot of the people that are moving the stock do.
What about the algorithms? Let's just talk about that. If we know that it's mostly trading on algorithms, the resistance points, the moving averages, the RSI, like those things are all inputted into the algorithm. This is not like a hidden secret. This is just a fact. You cannot discount that Wall Street is using these signals to buy and sell equities. It's ridiculous.
What we're about to see, he's 100% right in the way he tears down the guy on CNBS, like as he says, for incorrectly reading the charts to promote a narrative. He's 100% right on that. But because someone is biasly reading charts to put out a false narrative against Tesla, it doesn't mean that the charts themselves are wrong or that charts don't give you any data.
If you want to be a Poindexter, you can certainly argue the point. Maybe technical analysis can become a self-fulfilling prophecy. And I would suggest, while this is true on a very small scale, over the long term, it's completely meaningless and doesn't move the needle because there aren't that many morons in the market. There are some, but there's not that many. How can we know if this is a reasonable statement? Well, if technical analysis, aka astrology for stocks, was so effective, surely every single person who understands how to read a chart would be a multi-quadrillionaire. Because you look at the chart, or your crystal ball, or whatever you do, pray to the flying spaghetti monster, and then you can tell exactly what's going to happen in the future based on the previous state of the stocks chart, right?
That is a false statement. His premise is saying that we're looking at charts to see what the stock price is going to do tomorrow. Looking at what the stock price did historically informs your decision about whether to invest or not and how much to allocate. It has nothing to do with knowing what the price is going to be. The premise of his argument is flawed.
He probably means like in 5 years, you don't know what the price is going to be from the stock chart. And I agree with him. We don't know because the execution of the company will determine that. But I actually disagree with you. Tomorrow, we might have an inclination of where the stock will be based on the chart because TA does work to a small extent for days and maybe weeks, but nothing more than that. No one's saying years and decades. That's ridiculous. If you said a day or two or an hour or three, like not to use these technical signals, you're not using all the information available to you in the market. You're just ignoring information.
Two things. To his point, he is a buy and hold guy. So it doesn't matter to him what it does tomorrow. It's just he's going to buy it anyway. But to disagree with you, on a day like today, when Tesla is right now in the middle of their earnings, the charts don't tell you anything because we know that there's a massive event that the market's going to react to. Whatever the reaction is will be reflected in the stock price, but it is not predicted by the stock price yesterday.
You're bringing up a valid points in terms of that when there's actual valid news from the company, fundamental news from the company, that's obviously going to affect the stock price. So you should not be trying to do TA in the middle of that. That's insane, obviously.
Right.
But as soon as that's over and we have all the news, that's the only thing that takes over for the next 3 months while Tesla gives us a bit more news for the next quarter.
Apparently we have a clip to play. I'm not sure what's going on, but cue clip.
What is all this astrology business? Fundamentally, it's the contention that which constellations the planets are in at the moment of your birth profoundly influences your future.
So, kind of like technical analysis. Which position the chart was in the past determines the future of the chart, because that's how it works, right?
No, that's not how it works. The chart is not a prediction of what happens in the future. They are breadcrumbs, letting you know where investors have been. It's giving you a historical indicator of what investor sentiment and their actions at that time were. Stephen, you know this too. It's not like he doesn't know this.
And Wall Street wouldn't make so much freaking money if it didn't work. Let's face it. Like him saying that is correct when you're thinking in terms of years and decades, once again. But he's totally off base when you're talking about in days and weeks and months. In 5 years, I know Tesla's going to be more than today. Like, it's just, I know it intrinsically.
Right.
So I could buy it today or tomorrow or any day, or it doesn't really matter. But if I look at the chart, I might say, you know what, there's an opportunity coming up in a week or two. That's probably going to be amazing.
To your point, if you are a long-term Tesla investor, why would you not want to use some data that could potentially get you a better price so that you're in an even better position for the future? It doesn't make any sense.
Well, he might say, you just buy the stock. Well, yes, but you can do that every day and then overpay for it for years. Why wouldn't I want a better price as a long-term investor? Because instead of buying it at 1200, which I knew was overvalued, buy the chart. That's it, just based on the chart. It wasn't that, oh, it sounds so expensive. No, I looked at the chart. It was kind of high, right? And then I was like, this should come down a little bit just based on technical analysis, how far away something is from the moving averages. So now it's at 600. It's half the price. I get double the shares.
And also understanding that at the level that Tesla's at right now, a majority of the money pushing this market cap are from institutions. And they have that fiduciary responsibility to lock in profits when something runs up so much. So if Tesla goes from 800 to 1200 overnight, they have a responsibility to trim some of the positions. I mean, Look at Kathy Woods. She's the biggest Tesla bull, and she frequently trims her position to lock in some of those profits. So if I'm sitting on the backs of these whales, not being aware of what the whales are doing would be is dumb. And he himself uses a lot of technical data to push his bull thesis. He's got his 10-year Tesla stock price targets that are all based on data that make him think of where it's going to be in the future. But for some reason, he's got something against analyzing data when it's in a chart.
Apparently his data is all astrology too then.
Yeah, apparently all your data is just astrology too.
Let's put on that Carl Sagan episode again.
Right, let's go see what Carl Sagan has to say about your 10-year Tesla stock price targets.
A few thousand years ago, the idea developed that the motions of the planets determine the fates of kings, dynasties, empires,
and stocks.
And price targets.
He's picking the data that he likes and ignoring the data that he thinks is useless. That's fine.
Right.
But you can say that. You can say, to me, this data is not as important as the fundamental data. That's fine. You can say that. But the simple fact is, if you're given information by the market on a daily basis, maybe you shouldn't ignore it. Oh, now is an opportune time because everybody's saying that this is a trash stock. Literally, they're saying that by cutting it in half. They're saying it's not worth that previous market cap. It's worth this market cap now. We can use that data to be better investors.
And getting better deals. I mean, neither neither Mark or myself are selling any shares anytime soon. We just don't have infinite money. And so the idea is I have to be smart with my cash. And that means trying to get the best price on the stock as possible. And I did. I bought today pre-earnings, figuring like, if it does go down, I'll buy more. But if it goes up, I at least locked in some shares at this price. Now he's about to watch and analyze a section where they analyze charts, and we can then analyze Tesla stock, that same chart, and show how the guy was being biased.
He's analyzing the chart master.
Yeah, the CNBS chart master.
Having responded to this trend line beautifully, we have now, of course, undercut, put in the red arrow. So let's draw the lines. You see the head and shoulders top? Watch this next iteration. Same thing. And there it is. Meaning this has all the elements of a great winner. I mean, 12 to 415 that stalled and losing its way.
Nevertheless, astrology survived and flourished.
Put that red arrow in again.
This is where Mark's problem comes in. This is the guy that looks at the $12 stock price when it was 12 in 2019 and doesn't buy.
Yeah.
This is the guy. And then now he's like, oh, it just went to 12 to $400. It has all the elements of failure. He wasn't the guy buying at 12. That was me and you. We were talking about this and buying it at that. Literally, it's probably at $12. That's the cost
adjusted. Cost-based adjusted average. Yeah.
We were buying it because, hey, there was no head and shoulders. It was just losing money.
It was just a tiny little shoulder. Maybe an elbow. It wasn't even a head or a shoulder or nothing.
So in this respect, I think the chart master probably does not buy good stocks because he always waits for the perfect indicators to show to buy stocks. So maybe this is where Steve and Mark Ryan's problem is in this guy.
In that respect, we are in agreement. I agree that these guys on TV talking about charts, they already have a narrative that they're trying to push on Tesla, and then they're trying to find evidence in the chart or bending the information in the chart to make it seem like it's true. And in that respect, we're in agreement. That's not the way you're supposed to do it. You're supposed to look at the indicators unbiased and see what it's telling you. You're not supposed to bring your conclusion to it already.
Let's go to the here and now, even up close and personal. So now there is the head and shoulders. And look at the authority of this level. Basically, we have a huge risk that we undercut and we plunge to the downside.
Why? Because it seems to lend a cosmic significance to the routine of our daily lives.
Final chart, same time frame, just drawing the lines a different way. Not good. We are set up with risk that we undercut and drop sharply. I think it's a dangerous bet to be long here.
I think it's a dangerous bet to be long here. Near 12-month lows. What the is this guy thinking? I'm just kidding. He's not thinking, because technical analysis, all the answers are in the sky, or in this case, in the charts. And as Carl Sagan wisely pointed out, astrology, whether for stocks or otherwise, encourages a dangerous fatalism. This obviously means this, and therefore I don't need to think, because if the technical analysis, the stars say this, that's definitely true. I don't need to think about it, and therefore it must be dangerous to be long, because the chart told me.
What's the chart master's name? Do you know his name? No, okay. Chart master.
Yeah.
All right. So the chart master, okay, on CNBC, which I'll say loud and proud, okay, he basically...
CNBS, Mark.
The flawed part of it is saying this is a bad time to be long. And then you go to Mark, who's yelling at him about TA, but that's really not the problem. The problem is not actually the TA. When a company is growing so fast and it's not perfectly matching Wall Street's expectations, and it's been hammered 50%, 60% maybe in the next couple of days, that is the time to go long. And that is the narrative he's not spinning it as, because he wants to tell you why not to buy Tesla, because CNBC pays for him to tell you not to buy Tesla.
Not to buy
because
Tesla.
that's bad.
Exactly.
Because they don't put commercials on CNBC. So why would you say buy Tesla? It makes them no money to do that. It's much better to tell investors not to do it. But let's go to Stephen Mark Ryan for a second. He's conflating these two things where the charts could be correct. The TA could actually be accurate. That Tesla could go lower, but we can still go long because we're long-term investors.
Yes. Stephen Mark Ryan is correct in the assessment that this guy is a tool and that he's not giving you the information because he's spinning a narrative for a television network that is not incentivized to sell Tesla stock. We understand this, but it does not mean that the charts themselves are wrong. I just want to go back to what the charts are looking at. Even without looking at the prices or anything on this chart does not tell you that Tesla stock is going to go down.
No, that one doesn't. I agree.
This tells you that Tesla is in a descending channel, if nothing else, but you can see it bounced 1-2 times off of this level of resistance, and now we're here at a third time before earnings, okay? You don't know that it's going to go down for sure. This guy's making it seem like, oh, this looks bad. This is really looking bad. Why? He doesn't explain why. If anything, I'm looking at this. If I just saw this chart without even knowing what company it was, I would say if it bounced there twice, most likely it's going to get some kind of relief rally off of that because it's got a lot of support at that level. And even if you go back more historically, even if you go back further, extend this line, it still has some support here. It has some support here. It has some support here.
That whole level is a level of support, and it would only break down if either the quarter was super terrible. Now, fundamentally,
I'm saying fundamentally, yeah.
If no fundamental news comes out, people are going to trade around that wedge that we're talking about.
Yeah.
And they can trade for another month or two, but we do have fundamental news now, and we can check currently what's going on.
But the point is, just looking at the chart without even knowing what company it is, this would tell me that it's most likely a position of support for this stock. If it wasn't the day before earnings, it would be seen by retail or institutional investors as a good place to pick up the stock. And you can see by the descending peaks that the sellers are selling out at increasingly lower levels to lock in profits as it comes down. Typically what happens in this kind of chart pattern is eventually the wedge narrows to the point where buyers and sellers converge, and then the stock has to make a choice. Either the buyers win and it shoots up, or the sellers win and it breaks down. But to say that chart reading is wrong because this who is clearly being paid to spread propaganda on Tesla is giving people the wrong information, is the wrong information itself to give your own viewers.
Astrology, whether for stocks or otherwise, encourages a dangerous fatalism. This obviously means this, and therefore I don't need to think, because if the technical analysis, the stars say this, that's definitely true. I don't need to think about it, and therefore it must be dangerous to be long, because the chart told me.
Brian, you with the other two guys? A plunge lower?
I am. I mean, look at that chart. Looks terrible if I'm an investor in Tesla. I mean, it could seriously go to the downside. And
I just can't handle this. I just cannot handle this.
Neither can I. For him to look at that chart and say that chart's not looking good. If you are buying that company long term, that chart looks great because it tells me that it might hit that top of that channel and come back down again to the $200 level, in which case I'll get to pick up even more. There's nothing in that chart that says it's looking bad. So I'm with you, Stephen, in that reaction. Like, what is wrong with this guy?
See, that chart master, by the way, he has some valid points in his other charts.
Can we call him a chart disaster? I don't even want to put the word master. The chart disaster.
That chart master from CNBC, he has valid points in his overall chart analysis that Tesla has a possibility of breaking down. But once again, it doesn't mean you don't buy as a long-term investor. It doesn't mean that it's crashing back to $12.
Right.
So when he the thing is, he doesn't follow it up. There's no follow-up to say, oh, this is going to break down. It's going to hit 180 and probably then shoot to the moon, buddy. Okay.
Right.
Because that's my chart analysis. That it's
right.
Some lower value, maybe 180, maybe 150. Who knows? Maybe even if the chicken is right, 140.
Right.
Doesn't matter. wherever it goes, I believe it's going back up after a certain point. So I'm just looking for opportunity to DCA heavier and heavier into Tesla because I know where it's going over the next couple of years. Now, if the chart master said all of that, he would fix all of his biased negative Tesla stuff, right? And then maybe Stephen Mark Ryan wouldn't be so upset. So
Rightfully upset. He's rightfully upset.
Well, he's rightfully upset because he's making long-term investors, I guess, who watch CNBC and for long-term investing, doubt themselves. It does happen.
That's an oxymoron. A long-term investor watching CNBC for stock advice doesn't exist.
I'm telling you, there's like a 60-year-old watching. It's like, oh my God, I have a
How
lot of
long-term can you be at 60? I share your sentiment with respect to the reaction, but let's watch this guy's reaction. This guy, okay. I just want to know how much they're paying these guys to say this.
The chart told me.
Brian, you with the other two guys? A plunge lower?
I am. I mean, look at that chart. Looks terrible if I'm an investor in Tesla. I mean, it could seriously go to the downside. And
I just can't handle this.
It
I
could go to
just
the
cannot
upside.
handle this. We have to talk about the absurdity. That chart looks terrible. It could go lower. Like I said earlier, the thing that moves Tesla's stock price is the collective buying and selling activities of investors in the marketplace. Why is it that these clowns are talking about the chart? The double inverted scrotum pattern indicating that it could go lower instead of talking about Tesla's execution, their gross automotive margins, their wait times, their price increases. I'm not sure if they're high, stupid, or both.
look at that chart. Looks terrible.
people are talking about that. All day long we talk about that.
No. But what he's saying in mainstream media, and he's right on that. Mainstream media does not talk about that.
Okay, this episode with the chart master, they're not going to bring up the whole bull case for Tesla again. They're not going to do that. But if you watch other segments, they do have some bull case that they talk about, okay? They bring on other analysts. We know them. We've seen them 1,000 times, that Tesla's a growth beast, EVs are taking over. Lots of people say this all day long on CNBC too. But when you bring on this chart master dude, he's not going to tell you that. He's just looking at the technicals. That's it. That's all he's looking at. So I'm going to be a little fair here. It's not all... It's not all of these lies that Stephen Mark Ryan is making it out to be. Yeah, like some of these guys are a-holes on CNBC, and then there's some guys they bring on who give you the truth. When they bring on Ron Barron, you don't see a lot of Tesla community being so upset. Ron Barron is saying this is going to the moon, this is going to 5x in a couple of years. No one's complaining about that.
But there's nothing to complain about because what Ron Barron is saying is correct. Ron Barron is basing that on not stock charts, not the stock price yesterday, but he's basing it on Tesla executing on the fundamentals. They're listening to what Elon is saying and they're seeing if he's actually executing against it. And he is. And I think you posted this on Twitter. You even said this on Twitter. There was a guy who said something about the day is rapidly approaching when everyone admits that Elon's a fraud. And I think you responded, yeah, the guy putting rockets into space and single-handedly transforming the auto industry is a fraud. Please delete your Twitter account, whatever. Yeah, like it's like we go out there and we defend him too. In this case, I do not disagree at all with what Stephen Mark Ryan is saying. I do think that if you're expecting people to watch that segment and say the chart's looking like Tesla's going to go down, but you still have segments and you really are trying to give the overall clear picture, what you should say to investors is the stock price looks like it's going to go down, but it could be a knee-jerk reaction that is not indicative of how Tesla's performing. So if you're a long-term investor, this looks like an opportunity to scoop up some shares on the cheap.
You should have said that this company is executing on a different level, that if you get an opportunity when this does tank, you should probably be dollar cost averaging, which we recommend to everybody. Just dollar cost average into a falling stock that you truly believe in. But yes, he's not going to say that. That's not going to get you any ratings.
No, they need on Elon. Anyway.
Sorry, guys. Technical
All right,
analysis.
this is where he goes
Very
off the
thirsty
deep
work.
end.
What does it mean when you have a giant across your chart? Oh, okay, yeah, perfect. So,
anyway, that was all just in good fun. In general, I agree with like almost everything Stephen Mark Ryan has to say about Tesla. I enjoy his channel. I've been an avid viewer for several years now. I think he's doing good work and he's putting out great information. And I really am like YouTube's better for having him. But in this one case, I really disagree with what your position is on charts and the reading of charts. I think that there's a lot of people out there that think they understand what chart reading is. I think a lot of the mainstream media uses charts as a way of pushing narratives. Agree with all of that stuff. But if you are a long-term investor, you know that your stocks will be worth more in 5 years than they are today. Why wouldn't you use whatever information possible to get the best deal?
My only criticism of Stephen Mark Ryan is that he's supposed to be the analyst guy using all of the information. And charts are just one more piece of information, not the end all be all. They're just another thing you add on top, because I wouldn't even buy Tesla based on a chart. That's not why I buy Tesla.
It's fundamentals.
I buy Tesla for the fundamental
Yeah.
story that EVs are taking over, that solar is becoming bigger, that green energy is getting bigger. It's the next decade of a bull run. That's why you buy Tesla and Enphase. I brought it into this episode.
Always. Enphase is like Waldo. It's just, like pops up. Hey guys.
That's why you buy those things. But then when you want a better price, or you're just looking at when I should go in, you look at the chart. Let's not be idiots about this. Let's just use all the tools at our disposal.
I'm Steven.
I'm Mark.
And this is Freelancer Finance. We love you all.